you guys and having these a lot of private company investments, it's not like a stock where you can see it day to day what the price is. It's not like a real estate portfolio where maybe you can say, hey, here's our occupancy, here's what our average rents are. How do you think about tracking that progress along the way with these companies? Is it hard to do because they are private, or how do you guys view just like that, those metrics as they go and relaying that to the LPs?
Yeah, I think I mean kind of two questions in there. The first thing I would say is one of the things we always harp on with our companies is that due diligence is a part of due diligence, and what we mean by that is a company that comes in that has well-defined goals and objectives around what they're going to hit, whatever their KPIs are for the company. We're going to spend real time understanding how that drives kind of the flywheel of the business moving forward. Once you start to understand that, you can then document, okay, you told me when we were going in to make this investment that these are your KPIs. And I see that clearly identified in your business model. Here's how you drive to those KPIs. And then when I get to your first quarterly update, when you provide me that, I expect those KPIs to be front and center of what we've agreed to. And so you kind of march towards those individual items. And I think if you do a good job communicating, here's what I'm investing behind, here's what you're telling me you're going to do. And if you do those things, we'll have alignment. And I can then take those set of KPIs and those financial pieces and I can drive out, okay, what do I think my multiple on this type of investment will be over time? And for us, to be fair, I'm not looking at trying to do 10 to 12%, IRR. It's not the way I think about these businesses. I'm looking at in a 5-year time horizon, or 3 to 5 year time horizon, can I make 10 times plus my money, right? And so you have to quickly be able to escalate that business. And so my dollars going into your business needs to drive real bottom line outcomes. And so I can then fairly quickly project, okay, if I'm going to be at, $1 million of ARR this year, I need to be going to 2.5, 3 million next year, maybe at 6 million the year after. I need to go to 15 the year after that. So there has to be kind of a natural escalation you see in those companies, or else it's not investable for us. Doesn't mean you don't have a great business. It's just not investable for us. And so I would tell you, we spend a lot of time. I think we are probably as thorough as anybody in the due diligence piece. And I think that goes to having clear expectations of what we expect the company to do, and then driving our investment dollars into that thesis that we both agree these are the objectives that we're going to hit. And that's how we kind of pencil out, at the end of the day, how do I drive returns for investors?
Right.
And that's what we're looking for.